We've been trying to buy a house for over a year now. We keep getting outbid or not chosen, and now this. Interest rates doubled? Now I can't afford what I wanted to buy in the first place. Hi, Mark Stiles of Stiles Law down here at Studio B. So you've been looking to buy a home these last 2 years, and it's been complicated. It's been on a rocket ship of acceleration and really challenging for buyers, especially first-time home buyers. You sat down with your buyer agent professional, you laid out the plan, the dream, the vision, the future, the memories. You committed. You committed to buying a home. You sat down with your loan professional. You laid out all of the potential situations for the future. You were comfortable with your down payment, your closing costs, and the monthly obligation going forward. You were ready. You were going to be a homeowner. You found the town you wanted to be in, the neighborhood, the school district. You were ready. You were committed to buying a new home and entering a new chapter of your life. Then you stepped into the ring. You knew what you were getting into. Everybody warned you it's going to be tough out there. You were ready for the 3 rounds. 3 rounds became 5, 10, multiple offers, and now you're in a 15-round heavyweight bout. A lot of questions. Should we wait? Maybe the market will crash. But you didn't. You hung in there. You went back to the drawing board, sat with your financial advisor, your loan professional, your buyer agent, your team, and you created new plans, new strategies, and you kept momentum. There was optimism. You were hearing that there were signs of more inventory, more housing product coming to the market, giving a more balanced opportunity for you as a buyer. Then the uppercut. Interest rates doubled in a blink of an eye. What? I can't afford the house that I wanted to buy? Now that it's available, I can't afford to buy that house? Is that what you're telling me? Well, won't the prices drop? Maybe, a little. But why would they? These are houses that are being sought after. Folks like you, people with cash. There's still a high demand. So what do? Well, you could quit. That is an option. But aren't you committed? Weren't you committed to buying a house? Haven't you spent time, energy, sweat, blood, tears? What's changed? I'm often asked, when is the best time to buy a house? And my answer, somewhat coy, is 10 years ago. 10 years ago is the best time to buy a house. Oh, haha, I get it. Well, what's the second best time? The second best time to buy a house, if you didn't buy it 10 years ago, is today. 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 Where will you be in 10 years? Will you have owned a home for 10 years? Will you have created the equity, the wealth generated by owning a home, the memories and experiences of home ownership? Okay, so quitting's not an option. What about gifts? Thomas, we did a video on gifts of equity and gifts of cash. There are a lot of rules associated with that. Again, you want to sit with your loan professional and find out exactly what that is. So if Uncle Joey wants to lend you some money to buy a home, it has to be documented. It has to be disclosed with the lender. That lender must understand that Uncle Joey does not want to be paid back because a gift is gone. It's donated. It's not asked for back. A gift is a gift. But not everybody has that option. I understand that. What about looking at an adjustable rate mortgage? In fact, I think we talked about that on Feel Good Friday, didn't we, Tom? Adjustable rate mortgages oftentimes can lock in a lower rate for a certain period of time, 5, 7, 10 years maybe, giving you enough time to settle into that home and realizing a more reasonable monthly mortgage payment. And what about points? Maybe buy down the loan rate. This can be done in cooperation with all of your professionals. Your CPA, your loan professional, financial advisor, of course your real estate professional, collaborating with the seller's real estate professional. Because if you agree at a certain number, let's call it 500,000. Everybody agrees. Seller wants to sell at 500,000. Buyer wants to buy for 500,000. Well, let's increase that to 510,000 and buy 2 additional points to pay down the loan. Why not? As long as it's disclosed to the lender, it's well within their guidelines. It's totally legal. And you could buy 2 points with that. 1 point equals 1% of the loan amount. And by paying those points will reduce your interest rate, thus lowering that monthly obligation every month. But what about the real strategy? Why that town? Why that neighborhood? Does it have to be that school district? Will this be your forever home or a starter home? Is there a town outside of your targeted town that makes sense? Can you deliver real value to that community? Can you better that community by being a member of that community? Because if you do believe that you can deliver value to that community, you may be able to afford a nicer home in that community than in the one you desire right now. Open your scope. But to be a homeowner, you must start. So don't quit. Folks, I hope you appreciate this content. If you do, please share it with everyone and anyone. And if you want to strategize and talk to me about what we're talking about, meet me at calendly.com/mstyles. And I'll call you and we'll have a 15-minute, no commitment, no fee consultation strategy. And of course, don't forget to subscribe to this channel right here at Styles Law and ring the bell. So next week when we put out a new video, it'll let you know. Thank you and be well.